I got a lot of criticism for that optimism. Good afternoon. This is Jim Perry at Perry Capital. It's Friday, April 17th, and the global equity rally continues. The S&P is up about 13% from its March 30 lows. NASDAQ's up about 15 or 16. And more importantly, price of oil is down from 120 to almost 80. And it looks like it's going to go back down toward about the mid-60s here in the next week or two. The reason for that, very simply, is we've tightened the noose on the Iranian oil export machine. That means that the cash that goes into Iran has stopped. The country is effectively out of business. The straits, I think they're open. It's not clear, but it looks like we are because oil is trading off of that eventuality. As an investor, we'll know the straits are clear when we see the first cruise ship go through the Strait of Hormuz. I suspect that'll happen in the next week or so. Speaking of cruise ships, the cruise industry is the best performing industry in the S&P today, along with airlines. These are consumer discretionary stocks, best performers today. And again, industrials led by the big cap technology sector continues to pace the gains. What is interesting is that gold is fairly stable below 5,000, but Bitcoin is up 30% from the March 30th lows. That's the best performing asset in the world. The Bitcoin price is in the high 70s now, got down to about 60 3 weeks ago. I suspect it goes back up to 85. It is a good metric for risk-on psychology and mentality in the marketplace, and the Bitcoin has got a bid, and it seems like just about everything else does too. So, as we forecast weeks ago and months ago that we thought that this situation would resolve favorably. And I would say I got a lot of criticism for that optimism. And that's fair. You know, a lot of people are closer to the crisis than I am in North America. But the point is that you should never take criticism from anybody that you wouldn't take advice from. And I think a lot of the people that are criticizing the situation probably have missed all of this rally, as they did the April tariff tantrum rally as well. The U.S. economy continues to do well, and the earnings season is unfolding very, very favorably. FactSet says that the S&P is on track to grow in earnings 13.2%. Technology sector expected earnings growth rate in the first quarter is expected to be over 25%. So these are very strong numbers. Consumer discretionary, industrial, and big cap tech continues to lead the way. I suspect we will see that as the peace process in the Middle East unfolds. Have a good weekend. Thank you very much. Bye-bye.